Hello guys, it's Max here from Daily Market Movements, and today I'm going to be analysing some of the key markets here in the futures markets for the week the 20th of September going through to the 25th of September. But just before I start today's video, in front of you is our website dailymarketmovements.com, and if you would like to receive our trading signals, then please do not hesitate to go and head over to our website, which will then land you on this page here, and that's where you can then take advantage of our daily signals. We charge a very small fee of £249, but yeah, if you are interested, just go over and visit, and there's plenty of information with regards to this service. But to the markets, let's start off with gold. As many of you probably are already aware, we have seen some significant volatility in the markets today. Most major indices have all fallen during the trading session today, and that's why we have seen gold on the rise ever so slightly. We're currently trading up at 1760. I got gold pretty much spot on last week. I did, warn you all that I was anticipating for gold to fall. In fact, I'm still anticipating it to fall further down towards 1680. That's where we found support on 3 previous occasions, and so I think any minor, any minor rally that occurs here in the gold markets, as we are seeing during today's trading session, I think that this is to be sold, and we go down towards 1680. I really do not like gold at this moment in time, especially once the Fed begins to start tapering, and then of course after the tapering process becomes hiking of interest rates. So I think that shorting gold on any minor rallies is the way forward. So it'll be very interesting to see how we do going into the middle of this week, and especially the end. But I will give you an update, of course, with our midweek video that I'll be posting on Wednesday. Let's go and take a look at the Nasdaq100, which, as I just mentioned, has seen a significant amount of volatility today. But more so, we have had a significant development here in the Nasdaq100. As you can see, it's been a horrendous day for the indices. There we go. That's it on the 1 hour chart. We've had that bearish crossover, and we've just completely nosedived towards the low side. But more significantly here on the daily chart, we've broken below that 50-day EMA. Now, yes, I advised my signal team to buy the Nasdaq100. Unfortunately, that has triggered the stop loss during today's session, but not to worry. I'm actually rather happy that this has happened, because this creates even deeper value. I was saying last week that I'd be very happy if we did go and touch the 50-day EMA. That's an area where I would be willing to invest a significant amount of money. And what happened this morning when our Nasdaq trade actually hit our stop loss is that I advise all of my signal team to just basically take the day off. Let's see how deep the markets can go, I think that was the right decision when I look back at things, because we've just broken below the 50-day EMA, and to me, I think that the Nasdaq100 could still fall lower. So what I'm waiting for here, I'm waiting for the RSI to hit 30 on the Nasdaq100. That would then indicate that we are oversold. We are nearly there. We're currently at 33. As soon as we hit 30 on the RSI, that's when I will be buying this dip, and hopefully we can bounce back from this dip and, trade back above the 50-day EMA and go and target the all-time high. Don't forget that, during days like today, where we're currently down 2.5%, typically speaking, it's the days after when we actually bounce back and have some of the best days that you will ever see in the stock market. So yes, it's brutal, it's horrible when the markets pull back like this, but what tends to happen on most occasions is that the markets actually bounce back just as quick as they fall. So I'm still very bullish here on the Nasdaq100. I don't think that this is going to change the trend going forward. Let's bring up the S&P500 chart now. S&P500 very similar to the Nasdaq100. Again, we've broken below that 50-day EMA. Unfortunately, myself and the rest of the team here at Daily Market Movement Signal Team, we lost that buy signal that we had. We bought down when we bounced off the 50-day EMA a few days ago, but unfortunately during today's trading session we have triggered our stop loss. Not too worried though, because again, I advised our signal team to just basically step away from the markets. Sometimes not trading is trading, or not trading is the best trade that you can do. And today is a prime example of that, because now we've created deeper value, and unlike the Nasdaq100, we are now approaching that 30 level on the RSI. So very shortly, perhaps in the next hour or so, I'm going to send out a buy signal here for the S&P 500 down at 4,300, and I think that we will go and retarget that 50-day EMA going into perhaps tomorrow's trading session, or I hope to see a bounce before the end of the week. And of course, I will keep you all updated with that, whether we do see that bounce or not, when I post Wednesday's video. So let's bring up the crude oil markets now. How have the crude oil markets reacted today? And in fact, they've actually reacted very nicely, because we've had this minor dip here in the crude oil markets, and this is a typical move that you see from a technical point of view. We've broken above the 50-day EMA, we've had a nice rally, and what typically tends to happen once we break above a particular supportive area is that we you rally fast for the first couple of days, and then you come back down and retest that supportive area as the new floor. So prior, it was the roof in the market when we were trading below the 50-day EMA. We've broken above it, and now it looks to me that we're going to go and retest it to see if it is going to hold as the new floor in the market. And then that's where I want to capitalize on a bounce that will at least take us towards the swing highs up at $73 a barrel. But I think eventually we go towards 75. I think crude oil markets has just been dragged down with regards to the major indices pulling back during today's trading sessions. Globally, most indices have been in the red for the session during the trading day today. But this is very typical. September is historically the worst month of the year for the stock market, and prior to the trading session this afternoon, we haven't really seen much volatility this month so far. So you could say that this was anticipated, this pullback in the indices, which of course has dragged down crude oil along with it. So I see this as a fantastic buying opportunity. I think going into the end of the week, we will see that bounce. So this is an area where I would be willing to buy the crude oil markets. Let's pull up the euro US dollar, last but not least. So the euro US dollar has continued its fall towards a downside. Those who've been watching my videos for some time, you will know that I am a massive bull here for the euro US dollar. We have a nice supportive area roughly around this, this 1.16 area. You could even argue 1.1655. And then of course around that 1.17 area also offers plenty of support, where we've bounced on 2 previous occasions. I see this as a buying opportunity. I think that eventually we break above the 50 and the 200-day EMA and trade back up towards 1.22. Those who've been watching my videos for some time now will know that I prefer the euro over the US dollar for the medium to long term. So that is how I'm looking for the week of the 20th of September going into the 25th. Of course, as always, I will give an update on Wednesday to see where the markets are, and then I will do a follow-up video on the Friday, just giving a conclusion of the moves that we've seen in the markets. But we've started off the week with some very negative, downward pressure here in the markets. But this is very typical September moves. As I just mentioned, historically speaking, September is the worst month of the year when it comes to stock market performance. But what's good is that, as we go into October, especially November, December and January, historically speaking, this is one of the most bullish periods of the year for the stock market. So although days like today do hurt, and many of you would have probably blown your trading accounts, this is just, this just goes to show how important risk management is. And the markets have just been going up and up and up and up for the past 18 months, and days like today is basically when the markets gets a glass of cold water and throws it over your face, and basically tells you that the markets don't just go up and up. And this is why you have to have a good strategy and a good risk management. So to end this video, if you guys are wanting some more advice or help, then please head over to our website. You can sign up to our trading signals, and of course you will have our support via WhatsApp. But thank you very much for watching today's video. I hope you enjoy the rest of your evening, and just please be careful when trading during choppy and volatile sessions like we've seen during today's session.